In this video I will present a trading strategy that made over $200,000 at one moment. So stay tuned if you want to know more about what happened and how this strategy works. As you might already know, besides testing other people's trading strategies found on YouTube, the internet, GitHub and more, I also try to create my own mechanical trading strategies. And sometimes I challenge myself to think out of the box and try to be creative as possible. And that's why I gave myself a side quest to find actual working trading strategies based on the first letters of a K-pop group name and that also have a reasonable probability to make money. I've been to the I-DLE concert with my daughter a couple of weeks ago in Amsterdam and it was great fun. And this inspired me to see if I could find a trading strategy that also used their letter combinations. So let me show you what I came up with. For this mechanical trading strategy I have selected the following indicators. The G will be the Gen high-low, the I will be the intraday momentum index, the D will be the detrended price oscillator, the L will be the least squares moving average, and finally the E will be the Euler-Fisher transform. Now, based on the indicators I chose, the trading rules for this strategy are as follows. To buy long, the signal occurs if the least squares moving average is above its Gen high-low and the detrended price oscillator gets above zero. And for the intraday momentum index, I have decided that I will add an additional exponential moving average on that indicator and only trade if the IMI is above this EMA. And this EMA is not shown in the TradingView indicator, by the way. For the exit signal, I will use the Fisher transform indicator and that should have a bearish crossover. This means that if the cross down is below its trigger line, then the trade should be exited. And the short selling conditions are the reverse of the long signals. So short signals will occur if the least squares moving average is below the Gen high-low and the detrended price oscillator gets below zero. And finally, the intraday momentum index should be below its exponential moving average before entering a short trade. And also the exit signal depends on the Euler's FTY. And this time it exits the trade when there is a bullish crossover that indicates that the negative momentum has been passed. So in other words, it crosses above its signal line to exit the trade. Initially I will not use the backtesting engine's default trade exit tools because I want to let this strategy do its work as it intended. Maybe I will use these if I get bad initial backtest results and try to find more edge with better percentage based exit signals. So after determining the initial strategy, I created the Python code for this algorithm first in a Jupyter notebook. And since the intraday momentum index and least squares moving average are not part of any default TA library, I have additionally created these ones too. So let me walk you through the Jupyter notebook and show you what I've done. First of all, I loaded the necessary libraries and created pandas data frame. Then I also renamed the columns so that I can use these in later analysis and functions. And here I show you some generic information about the data frame, like data frame info, some statistics information about the values in the data frame, and initially the data frame itself. And now that this data frame exists, let's add all the indicators to the data frame too. Here I add the high-low, DPO and FSI from the pandas TA library. And I also created two functions that calculated the IMI and LSMA indicator. All these indicators will add their respective indicator columns to the original data frame after I have executed this notebook shell. Now I can ask pandas to show me the columns, and if all the indicators exist, let me then show you these added columns in the output cell. And after I've done this, I will start making the entry signals. Under normal circumstances, I will let the strategy file of the backtesting engine handle the entry and exit signals for both long and short trades, but since I want to see them in the data frame as well, I will need to make a function that helps me show the entry and exit signals in the data frame too. I can also filter the entry signals of the data frame column. This way I only have the dates where long and short trades are actually happening. Then I will check them on the TradingView chart with the correct pair and exchange. And here you can see all the go long and go short signals in the data frame columns. If I use these buy and sell conditions in the frag trade strategy file, then I can be pretty sure that these are the same signals there too. Now next come the exit signals. Here I will use the same principle as well. I will create a somewhat similar function to the exit signals and let the function make an additional column that contains the exit signals. And note that this function does not look at the data frame to see if there is any actual entry signal or virtual trade made. It just makes the exit signals, and I'll have to check for myself if these are correct on the TradingView chart. The trading bot will actually keep track on the actual trades and act on these exit signals. And let me filter out these exit signals as well to see where these Fisher crossovers happen and make these trades exit. Now, as an additional view on how the data frame looks like, I also created a plot to show you the indicators on the price. This way I have an additional check to see if it resembles the TradingView chart too. And as you can see, this plot looks pretty similar to the TradingView chart, and it gives me confidence that if I code this strategy into the actual Python code, that it can be read by the trading bot and it will also work. So let me do this coding off screen and then I will start doing the backtest to see if I found an actual profitable trading strategy. The first backtest I did was with the futures trading option, and here I already got some optimistic results. The algorithm seems to perform well on the 1 day time frame, but slowly loses its edge going into the smaller time frames. Looking at these results, the indicators and the way they work together, it looks like this can be used more as a swing trading strategy than a scalping strategy. It has a slightly higher win rate than the other trading strategies I found so far, but the drawdown is also somewhat higher than the other swing trading strategies I found. Furthermore, only 38% of the 50 pairs used react well to this strategy. At its peak, this strategy earned almost a hypothetical $100,000, but after the peak of the bull market, these profits slowly drained back to the market again and caused a 60% drawdown. The remarkable thing here is that the strategy catched a huge pump of Gala, which created this peak in profits. Furthermore, I expected this futures trading strategy to perform well under bearish trends, but it seems like this is not happening at all. So further analysis is necessary to find out why this is the case. After these futures trading results, it was time to see if this strategy would perform even better if I would let do only long trades. Again, the results look to be very promising on the higher time frames, and it's clear that shorter time frames suffer from overtrading, with too many signals that prove to be losing trades. The profits look to be amazing here, but the underlying factors and percentages show a different story. On average, every 4 losing trades only have 2 winning trades, and again it's clear that you can endure a long streak of losers eventually. Also, the win rate is not that great, and the drawdown clearly shows that these numbers are comparable with the average swing trading strategy's performance. Also, you'll have to find out which pairs respond the best with this algo, since only 40% of the 50 pairs react well. And finally, Sortino and Sharp are not that enthusiastic about this algo, and you can see why on the profit plot. Because here again, the major profits come from the pumps of some crypto pairs. In this example, this backtest also got the major pump of Gala around May 2022, and this probably caused the profit to skyrocket to over $200,000 at one moment, which is a great profit if you started with $1,000 here. But this wouldn't be me if there was no catch behind this. And to stay realistic, I also have to say that after this major profit, the strategy slowly started to bleed its profits back to the market, to an end balance of the backtest period of around $60,000 here. Still not too bad, but you gave away 70% of your profits back to the market, and this is more than the 60% drawdown of the futures trading strategy. And this is also why the futures trading version scores eventually higher than the spot version. because I do not weigh profits as much as I do the prevention of drawdowns and better ratios like Kalmar, Sortino and Sharp. So would this algo be performing better if I use the trading bot's default mechanics of exiting the market after a certain percentage gain or loss? Well, I also did an optimization run on the stop loss and ROI settings here, and these are the results of that optimization run. With the optimization, the strategy also got some settings that made it stop out earlier and take profit sooner without having to wait for the Fisher crossover exit signal I programmed. And adding these additional take profit and stop loss points made the strategy perform much better in terms of win rate, Kalmar, Sortino and Sharp ratio. Also, more pairs responded better to these additional exit points. The main disadvantage here is that because of these earlier exits, there is not much letting your winners run, but you will get a better feeling when you have more trades that exit with a profit. The main problem I still have here is that futures trading, also making profits in bear markets, is still not working as I had hoped for. A possible reason for this is that moves to the downside are more violent and deeper, and this trading strategy does not act on these violent drops successfully. It seems to perform better with more steady and slowly inclining bull markets because the signals are better matched with each other. But that is just a theory that has to be examined further for the people that find this trading idea attractive and want to fine-tune it more to their likings. At the end of this video, I admit that I did not present the most optimal trading strategy here, but it is certainly worthwhile to use as a baseline and tweak the algorithm further to detect its major flaws and try to mitigate them. Since it is a relatively easy strategy to follow, you could also use this with manual swing trading and try to catch some big market moves here, especially when the markets are bullish again and you probably would see some major crypto pumps happening again, and hopefully catch one or two of these pumps too. If you made it this far, then you are truly a diehard fan, and I want to thank you very much for watching this video. I hope it was useful for you and learned something new. You can find the post, strategy and all the other backtesting files on my Patreon site to download. And if you also want to click on the like button, subscribe to this channel and leave a small comment, not more than hi or so, then I'd really appreciate that. Again, thanks for watching and I will see you in the next video. Goodbye!